Be sure to hit the like button, friends. Thumbs up this video and share it out, please. And don't forget to subscribe to the Bill Huston podcast on YouTube. Click on the bell and select all notifications. And please donate if you can to support my work. Donations in any amount are greatly appreciated. Let's talk about peak oil. This is something that people don't really talk about so much in the news anymore these days, is peak oil. Now, there's something very interesting about peak oil, and we're going to get into it. But first, we're going to just discuss what is peak oil. What is peak oil, first of all? What does that mean, peak oil? So, peak oil, this guy, his name is M. King Hubbert, I don't think he's alive anymore, but he was a petroleum geologist. And he came up with a unique theory. He looked at the output curve of a single oil well, and it followed approximately a parabolic decline curve. That's a little bit arguable about the front side of the curve. I think it's a little bit sharper, but basically the back end, it follows basically a parabolic curve. So he said, M. King Hubbert said, if we assume that the output of a single well follows approximately a parabolic curve, what would happen if we aggregate an entire oil field? What would be the shape of the curve? And M. King Hubbert suggests that it's the same. The aggregate of all of the wells in the field, the shape of the curve is approximately parabolic, exactly what a single well looks like. Okay, peak oil is the theoretical point in time when the maximum rate of extraction of petroleum is reached, after which it enters terminal decline. Terminal decline, okay? It's never coming back. There's a maximum output in terms of gallons per day or barrels per day. And after that point is reached, the entire field will go in terminal decline. There's nothing you can do to bring it up, bring it back from that point. The point would be the point right at the top. And this guy says, this is Hubbert's prediction, global peak oil by 2000. Are we there? Have we already reached there? Well, that's a little bit arguable because of things like shale oil and shale gas and tar sands. It seems there's an apparent glut right now of oil and of gas in certain areas, the production areas. So you wouldn't expect a glut to be on the backside. This is the backside of Hubbert's peak. When I'm talking about the backside, I mean from the maximum point, hence, looking forward in time from the maximum point. Okay? This theory, I believe, is sound, but we have a glut right now. That's the strangest thing. So can we explain the glut, the apparent glut? Well, first of all, you have to remember that the U.S. is a net importer of crude oil to the tune of about 9 million barrels per day. We're a net importer of 9 million barrels per day of crude oil. So we have a very hungry appetite for crude oil in the United States. So, and what you might say is that this curve has been stretched. It's been stretched this way. It's been pulled this way because in the last, say, 20 years, 10 to 20 years, with these new techniques of horizontal high-volume hydraulic fracturing for gas and these similar techniques for oil, multi-well pads, slick water, hydraulic hydrofracking, and other forms of non-conventional well stimulation. So since the last 10 years, 20 years, give them some slack and say 20 years, there's been all these new techniques that have come online that have made more reserves technically recoverable. Okay? So that's what I'm saying is why we see the apparent glut right now, is because fracking, shale gas fracking, made a whole lot of oil and gas technically recoverable where previously it was not. But that takes a whole lot of energy inputs, and there are also environmental side effects. So the energy inputs that's what this graph is all about. This is called EROEI, energy returned on energy invested, or net. Sometimes it's called net energy returned on energy invested. So it used to be you could poke a hole in the ground, you could spend 1 unit of energy and develop an oil well that might produce 100 units. So that was an EROEI of 100 to 1. And that's what these legacy, this says that's what the legacy oil and gas fields are, is very, relatively low energy invested for a high energy output. And then eventually, as we discovered newer oil and gas fields, it took more energy to develop that resource. And wind is here, coal, solar, tar sands is way down here. This says biofuels. There's actually one, I got a graph coming up that's going to show you that corn ethanol is actually net energy negative. Actually, it's actually down here. For some finite number of energy expended, the actual energy output is way down here. It's negative. EROEI. So I just wanted you to to understand that concept and to think about it. And by the way, I've tried to get a handle on this. What is the EROEI of shale gas fracking? And nobody really knows. There's very, very high energy inputs. So I'm putting it way down here and on the graph. And by the way, corn ethanol, you actually got to draw a line farther down here to show you where corn ethanol is. Corn ethanol is way down here. Okay, so this is called the energy pyramid, and this is I call it speeding towards a brick wall. So we're starting out up here where there was abundant energy. This is up here is when there was lots of abundant, cheap, conventional energy available. So as we move down, we have decreasing concentration as we move down the graph, okay? So the stuff at the top is super good, super high density energy, and as we move down, it's crappier and crappier. That's why we got like tar sands and shale oil. This is low energy. For every unit you have developed, there's very low energy output. And there's also increasing effort as we go down the graph. It takes a lot more effort to do this unconventional drilling than the conventional drilling cost. So then 90% of the world's production has been, up until this point. So we've already reached the practical end of conventional. So this line right here is this dotted line. This is the price technological limit to access. Price, and when they say price, they're really talking about EROEI. That's what they're talking about. Because dollars don't really matter. What matters is energy. If you have to spend 1 unit of energy to develop 1 unit of energy, it's not worth doing it. That's what the red line is. The red is 1 to 1. This is the ultimate barrier. Energy in equals energy out. That's what this one is, the ultimate barrier. But really, the technological barrier or the price barrier is a little bit higher than that, because you can't really once you get to a certain point of diminishing returns, it's not economic anymore to do any further development. So that's what the energy. This is a graph by J. David Hughes, by the way, of the Post-Carbon Institute. And you can see the entire presentation that this comes from on Shale Shock Media in a video produced by yours truly. This is again showing you kind of peak oil. Historical production, U.S. discovery peak. This was back in the 1940s. Biggest oil field discovered in Kuwait and Saudi Arabia. That was in the 1950s. In the 1960s, peak of world discovery in 1965. That means they're not discovering new oil fields at the same rate. It's decreasing. Here's Alaska and the North Sea, and the Gulf of Mexico. And so the black line is once again the historical production curve. Okay, so we're going up and up and up and up. Now what's in this circle? Today we discover only 1 barrel of oil for each 4 we consume. So this is the new field discovery curve. So this is going down. This is another way of displaying the peak oil curve. Let's look at the human population versus oil production. So the blue line is billions of people. We got 7 billion people up here, and actually this graph is a few years old. So really we're up about 7.7 billion. We're up here somewhere now in 2020. So 2020 would be out here, and we're up here in the population curve. But as we can see, the human population didn't exceed 1 billion people until about 1800. And 1800 was getting close to the beginning of the Industrial Revolution, with trains and cheap oil everywhere. Now, this is just the last 120 years. This is zooming in on the last little bit here. Okay, we're going to zoom in on this last little bit. So that's what this is. We've zoomed in a little bit. This is 1900 to 2005. So this is once again a few years old, 15 years old. So we have billions of people in the blue, and the amount of oil, number of barrels of oil per day. So you can see that the human population curve pretty much follows the oil production curve. And this makes sense. This makes complete sense. Because what we're going to show you is that it takes oil to harvest food, because there's a lot of energy inputs into food production, including transportation costs. There's a lot of chemicals used for herbicides and pesticides and fertilizers. They all come from fossil fuels. So when you increase oil production, you increase the food supply. And there is a maxim from biology that says that a species will tend to grow to meet the food supply. And that's exactly what we're seeing here with this graph. By the way, if you are interested in the correlation between, all these topics, climate change, the correlation between world oil production and human population, I highly suggest the book Last Hours of Ancient Sunlight by Tom Hartman. Really, really excellent book. So this is what we would call a standard. This is a standard parabolic curve, and once again, this is just an approximation of what Hubbert's peak is all about, but it's just for illustrative purposes. So the problem once we get to the backside of Hubbert's peak is that the global demand for oil, because the population is rising, the global demand for oil is rising all the time. So if we do ever get to the point, this maximum point of production, and it starts dropping off, then that produces stress. Lots of stress everywhere. Food shortages. There's probably going to be conflict zones where they're fighting over the military generals and the industrialists are fighting over the last remaining very dense, high concentrated energy that's left on the planet. So that's the reason why we're having wars. Global demand is rising, yet the total amount of oil production is going to be dropping forever. Now, once again, we see an apparent glut right now, which seems really weird, but you have to remember all of the cost externalizations that are going on. So you can cheat the curve. In other words, let's look at the first one. There's the first curve. Here's the first one. So it's possible to basically take this curve, and the area under the curve represents all of the technologically recoverable oil reserves on planet Earth. We can cheat the curve, which means we can borrow, at this point, we can borrow from the future. So we can flatten it out here. We can draw it, flatten it out over here, but then at a certain point, we're making the inevitable cliff much, much sharper. So you can pull the curve out like this, but then it's going to go bam, it's going to drop. And that's what this graph shows. That you can flatten it out for a while, but you're really borrowing from the future, and you're making this transition. You're making a crash possible that's going to be very, very sudden onset. When the crash happens in this kind of a situation, if you're borrowing from the future to make it seem like you've got a glut, when the crash happens, bam, it's going to be very sharp and very sudden. Cut to the present day. What's going on in the energy markets right now? Have you been following LNG and crude oil markets? The stock markets, they're in upheaval, even though there's this apparent glut right now. So it's really wacky. It's really crazy what's going on. But the stocks, the energy stocks, are all being beat up pretty hard. So this is what I was saying before, that it's possible also to stretch the graph out a little bit if we can somehow produce more technically recoverable resources. Now let's go back. I want to go back to a slide that we saw earlier, energy pyramid. So if this is the ultimate barrier, and this dotted line right here is the price, or energy returned on energy invested, EROEI, the limit to technical recoverability. What all of this technology has done, shale gas fracking and tar sands and all this stuff, this very exotic stuff, at a very high environmental cost. You got to keep that in mind. There's all these externalized costs at high environmental cost. They are increasing the amount of technologically recoverable reserves. So it's taking this green line and it moves it down a little bit. But it doesn't change this one. This one is a hard limit. This is EROEI 1-to-1. If you spend $1 to get $1, then you're not getting anything. It's just a waste of time. And that's what we are approaching. So that's what this is. This just shows that it's possible to find new, with extreme technology, it's possible to increase the area under the curve by increasing the technologically recoverable reserves. But this is a Band-Aid. It's not a permanent solution. And remember those high costs to the environment that are usually involved there. Be sure to hit the like button, friends. Thumbs up this video and share it out, please. And don't forget to subscribe to the Bill Huston podcast on YouTube. Click on the bell and select all notifications. And please donate if you can to support my work. Donations in any amount are greatly appreciated. So this is the Richard Manning clip that I wanted to show you. And this is from a film by Timothy Scott Bennett called What a Way to Go.
We faced an enormous crisis a generation ago, early 1950s, 1960s, and for a reason. It was the first shift in the fundamental strategy of agriculture that had occurred in 10,000 years. Agriculture, because it's catastrophic, must constantly have new land. And must constantly have new land because it also creates excess population, and those people need a place to go. So, from the beginning of domestication of wheat 10,000 years ago in the Middle East, what is now Iraq, ironically enough, to about 1960, agriculture had a single strategy, which was it compensated for its weaknesses by taking new land. In 1960, we ran out of new land. Period. There was no more, essentially. And we've colonized some new land since 1960, but we've lost an equal amount of things like salinization, loss of water. So basically, our arable land base, our farmable land base, is the same as it was today as in 1960. At the same time, we were faced with a period of enormous population growth. We were at 3 billion people then. And a lot of real smart people were looking at those numbers and saying, we're going to see famine within our lifetime, massive, widespread die-off famine. Paul Ehrlich, the biologist, was among those people and probably the most famous of the people to do that. And his predictions never came to pass. And it's not because his numbers were wrong, they were right. Well, what he didn't understand at the time was a revolution that was brewing in the background. It was called the Green Revolution. A fellow named Norman Borlaug, financed by Rockefeller Foundation money, was learning a trick that created a new strategy for agriculture. And while we call it the Green Revolution and call it pesticides and fertilizer and a number of other things, it was something quite simple, much simpler than all those things. It was short plants. By dwarfing both wheat and rice, he was able to create a plant that increased its harvest index, that is its primary productivity. More of that productivity was dedicated to seed as opposed to leaves and stem. But also because of that short architecture, they were able to hype that plant with chemical fertilizers and water, so it would support a heavier seed head. The result was a tripling of production, at least a tripling of production of both rice and wheat.
Okay, so you're getting that. So here's what he's saying. He's saying that because of fossil fuel inputs, due to this thing that they called the Green Revolution, you know how they always create, you know, crazy names for things. This wasn't a green revolution. It was a petrochemical revolution. You know, and genetic engineering was involved too because of the shape of the plant was altered to allow these chemical fertilizers and pesticides that it was able to, well, I think he said, triple the output of food in just a few years.
As a result of that, something like 75% of human nutrition today is covered by corn, wheat, and rice, 3 grains. The ultimate result of that was we were able to increase human population, support that extra population, plus ramp it up further. So
once again, the maxim from biology is that a population will tend to rise to meet the food supply. So if you increase farm outputs, then that will likely lead to population increase, and that's exactly what we saw.
In my lifetime, human population has doubled from 3 to 6 billion people.
Okay, this was published in 2008. It was probably shot in 2007 or 2006. So this is, this data is at least a decade old. So we're really at 7.7 billion people now.
The hidden fact in all of that was that all of that increased production depended not just on short plants, but on energy, fossil fuels. Because the chemical fertilizers that took advantage of that short plant architecture come from natural gas. It's a straight-off conversion, natural gas into fertilizer. But at the same time, we're using enormous amounts of energy to plow the field with tractors, to process the food, because grain can be eaten straight up. You can't go out and eat a piece of grain like you can a green bean or a tomato. It must be processed in some way. It must be cooked. And to transport that energy, because we have a globalized, centralized system, then there must be an enormous amount of transport. As a result of that, all that is that if we take a look at about 1940 and an American farmer, that farmer was using roughly a calorie of fossil fuel to make a calorie of food. Today, that same farmer uses something like 10 calories of fossil fuel to make a calorie of food.
Okay, that's a super important point. That's why I wanted to play this for you. I'm going to play that again because it's quite shocking once you realize what the implications are once you add peak oil in. Let's play it again.
An enormous amount of transport. As a result of that, all that is that if we take a look at about 1940 and an American farmer, that farmer was using roughly a calorie of fossil fuel to make a calorie of food.
So that's bad enough. Just the fact that every calorie of food contains a calorie of fossil fuel. What happens if there's an interruption in the fossil fuel supply? So 1-to-1 is bad enough. So what are we at today?
Today, that same farmer uses something like 10 calories of fossil fuel to make a calorie of food.
Now we're going to come back to that, but just remember that 10 calories of fossil fuel in every 1 calorie of food. And this was recorded 10 years ago, at least 10 years ago.
That means that petrochemicals, fossil fuel, have become embedded in our food supply. We put off the catastrophe that occurred a generation ago with fossil fuels. In other words, we didn't colonize new farmlands, we colonized new oil fields and new watersheds to make irrigation water. If we run out of fossil fuel, that strategy will collapse in a heartbeat. And we will be at exactly the position we were a generation ago when we had 3 billion people we couldn't feed, only now we have 6 billion people, exactly double the number.
Did you get that? That is scary. That's terrifying, if you ask me. That we, if peak oil is correct, and unless you believe in something like, what's the theory called? That's the deep oil theory. Abiotic. Unless you believe in abiotic or abiogenic petroleum origin, which is basically, the theory that there's an infinite amount of petroleum in the planet, and somehow the core of the planet produces it, and it seeps up into these oil fields. Unless you believe in something, and this is, frankly, I think most people consider this a little bit fringe, a little bit wacky, maybe, this abiogenic or abiotic petroleum theory. I mean, most people believe that the amount of oil is finite on the planet, which means Hubbert's peak is a valid theory. So remember, you are what you eat. So a cow is basically made of grass, because that's what a cow eats, unless it's in a factory farm, and then it eats something very unnatural. It eats soy and corn. That's a very unnatural diet for a cow. And that's one of the reasons why cows produce so much methane, is because they're eating food that they weren't designed to eat. Biology crafted a cow to be a very good eater of grass. That's what cows normally eat. So if there's 1 calorie of fossil fuel in every 1 calorie of our food, that means we are made of oil. But in fact, there's 10 calories of fossil fuel, and it's probably worse today. Like I said, this is 10 years old. If there's 10 calories of fossil fuel in every 1 calorie of human food, that's a big problem when we consider peak oil. Because if anything happens to the global oil supplies, and remember, we are importing 9 million barrels. Don't be fooled by this apparent glut and low prices. This could change very rapidly. This could change overnight. Okay, the situation could change overnight, and we just saw we're in the middle of an overnight change. Just in the matter of a couple of months, suddenly we have this public health crisis, global public health crisis, and we're having quarantines and lockdowns and all kinds of crazy stuff and meltdowns of the financial markets. So this could change very quickly, and that's what. So this graph here is from a website called dieoff.com, and in fact, it was written about 20 years ago. And it's by a guy called Jay Hansen, and you can still find it online. It's really interesting because he does a lot of writing about peak oil versus the human population. So what we see here is, if this is the world, this is again the peak. This is Hubbert's peak, and this is showing you other natural resources in decline. As the oil goes in decline, food is going to go into decline, and the human population, if we have a collapse, the human population is going to go way down. And this isn't Agenda 21 or anything like that. This is just a natural fact that the human population is going to, there's going to be a die-off of human beings, and if we do not keep the supply of oil flowing. This is what Tom Hartman looked at. Tom Hartman, in the book The Last Hours of Ancient Sunlight, he asked that question. He said, what is the sustainable human population if we don't have any oil? And he went back to basically what is the pre-industrial revolution, whenever cheap oil really became available, early 1800s or approximately. what was the human population around that time? It was about 1 billion people. And he even came up with a range. He said between 500 million and 1 billion people. So you might even heard, these fringe groups saying, "Oh, the globalists want to depopulate the planet by 80%." Well, I don't think it's the globalists. The globalists need consumers. The globalists need lots of consumers and lots of workers to keep the factories going. So, unless Andrew Wang is correct about automation, but I'm not sure automation is going to explode the way he's saying it is if we're running out of oil, because technology requires cheap fossil fuels. So if it's true that without fossil fuels, the Earth can maintain a human population of between 500 million and 1 billion people, which is what Tom Hartman figured out, then that means we have to shed between 6 out of 7 to 13 out of 14 people on planet Earth. That's a shocking fact. So that comes out to be about 86 to 92%. So that's where that number comes from. It comes from physics. It doesn't come from Agenda 21. It comes from physics. So that's a mighty scary concept, if you ask me. This is basically showing you the human history as the peak, the oil production curve rose and then started falling, and then projections into the future, what we can expect life to look like. So way down here in the in maybe 1950, late 1940s, President Truman, we had the Korean War, industry boom, population surge. That's like the baby boomers, right? That's like late 1950s, 1960. I'm a baby boomer. Then we've got cheap energy boom rising up here, 1965, JFK, LBJ, sex, drugs, and rock and roll, plenty of debt, suburban sprawl. Okay, now we're into the early 1970s. Boy, I grew up in a suburb in a cookie cutter Revicchio house, which is like kind of like a Levittown kind of a development. Cold War victory, right? This is Nixon, Ford, Carter, Reagan, oil embargo here after there was a disruption in the oil supplies. This was in maybe about 1980. And then we've got the internet, market speculation, another crash here that happened in the mid to late 1980s, 85. The Iran versus Iraq War, Gulf War, War on Terror, Y2K, housing boom, resource grabs. Now we're at 2005. This is where people theorized that the peak was going to occur. This is what M. King Hubbard, I believe, predicted was the year 2000. And I think he got it pretty damn close. So what's going to happen now? So one thing interesting is this blue area here. What does this blue area represent? The blue area is the alternative energy spike, and I would have moved it up here because it got flattened out. This is basically the extra petroleum that became technologically recoverable due to these extreme energy methods that we developed. And alternative might mean wind and solar too, so there might be a little blip from that. But it's ultimately not going to change things very much. And so this is the speculation. Price spikes and profiteering. Financial markets collapse. Didn't that just happen? Like last week? Stock market started crashing. 3 days that it crashed like 800 to 900 points per day. Biggest drop since the 1985 or something. Went too early. All right. Brownouts and unemployment and recession, brownouts and blackouts, the long emergency, shortages and rationing. Wait a minute, shortages and rationing. Isn't that going on right now? Crime and civil disorder, government collapse, deep depression, riots and famine, scavengers, anarchy. That's what they say is coming if peak oil is true. And all I'm saying is, this is the elephant in the room, friends, and nobody wants to admit this, but the human population on Earth, especially those of us living in the West, with a high standard of living, are utterly dependent upon cheap oil What does the post-peak oil look like? Markets crash, energy capital, energy crisis, food shortages, breakdown of civil government, martial law. Martial law. What's going on right now? Quarantines, lockdowns, martial law, global supply lines cut. What about all of those big ships coming over from China? They're going to be stopping if they're not already stopped. And that means Target and Walmart and all of these big box stores are going to have bare shelves. No more cheap Chinese goods, factories closed, widespread unemployment. People are staying home. This is happening right now. This is what the post-peak oil world looks like. I just think it's a coincidence that they're blaming it on the coronavirus, all of these events. So I just think, what is the possibility that the coronavirus is a cover? And as we showed you by the numbers, this is 3 orders of magnitude down from an ordinary flu right now in the United States. I don't want to hear about Italy or Korea or people falling over in China, because that's too far away for us to be able to get data on, figure out what's going on there. There could be very unique conditions there. Like we said before, R0, the rate at which this virus is spreading, is highly variable from country to country, which means that's suspect that this is the same event happening in these places with a very high R0, like Italy. There's something else going on. There's other contributing factors that we aren't factoring into the equation. That's all I'm saying. So that's it. That's the peak oil theory. And isn't it very interesting that even though we have a glut right now, it doesn't seem like, you start talking about peak oil, people laugh at you because there's this apparent glut. But maybe the apparent glut is only because of these extreme energy practices that are keeping the supply going, like fracking, like deep ocean drilling, like Arctic drilling, like tar sands. All of these crazy methods, extreme, and they're extreme because they're technologically extreme, but they're also extreme because there are high externalities, which means pollution and social costs that are associated with these things. So even though there's a glut, the glut might not be lasting. The glut might change very, very, very rapidly. And it's just a coincidence, I think, that peak oil should be coming. It should be here by now. It should be happening. And these are the things that we would expect to happen when we are in the post-peak oil world. And these things are happening now. Only they're not blaming it on peak oil. They're blaming it on a virus. Be sure to hit the like button, friends. Thumbs up this video and share it out, please. And don't forget to subscribe to the Bill Huston podcast on YouTube. Click on the bell and select all notifications. And please donate if you can to support my work. Donations in any amount are greatly appreciated.